Bismillah ar-Rahman ar-Rahim. Inshallah, we'll begin in 3 minutes to allow for the sunnah. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Maguid Abdelaaty. I'm president of Lariba company and deputy chairman of the Bank of Whittier. I'm here today on behalf of both organizations to share with you some solutions and issues that we're all facing here in America, and that is dealing with riba. You know, we all understand the severe consequences of dealing in riba that are mentioned in the Quran and the punishment that befalls it. And it's not just a Muslim problem, it's a problem actually that applies to the Old Testament, the Bible, etc. But some of the people of the prior books have found ways to minimize it. And it's our goal, inshallah, to make sure that we offer you tonight a brief definition and a test for what is riba and how should one avoid it, as well as share with you some of the achievements that our organization has been undertaking for the last 36 years to get around this problem and to deal with it and to make it make our life here in America much more easier and riba free, as we like to call. If anybody's interested in a copy of this presentation, you will have my email addresses, my cards. We also have a table outside. Please give me your email or text me to the number. I'll be happy to share it with you. We have a table outside, and we have some snacks, I understand, on the way. And joining me tonight is Brother Nusrat. If you can raise your hand. Brother Nusrat and I will be here, and there's Brother Zahir who's also on his way to help us with questions. As I go through the presentation, my goal is to allow ample time for questions and answers at the end. However, as we're going through the presentation, if there's an urgent question on a specific slide, feel free to raise your hand and I'll address it. If it's not on the slide itself, but the slide raises a question, I may ask you to hold on until the end if there's another slide that would address that. So I hope you will cope with me, inshallah. We're telecasting. Oh, I see Zahir outside now. Okay, tawakkalna ala Allah. For the last, just want to make sure we're on the right slide. Yeah. So our mission at Lariba and the Bank of Whittier is simply to provide a riba-free alternative to the traditional banking and finance products at the same or lower price. And it really bears repeating, to provide an alternative to the traditional banking and finance products at the same or lower price. As I go through the presentation, you'll see me kind of come back to this and point out how we're achieving that. So we're not trying to invent a new law, a new system. We're simply trying to provide an alternative that is available to Muslims and non-Muslims, to America at large, as also a window of da'wah, inshallah. And we've been at this for the last 36 years. So part of our mission is popularizing this RF brand. In order to reach America at large, we need a terminology that transcends cultures and beliefs, etc. So we've come up with the RF. RF can stand for riba-free for Muslims. It stands for rebate-free for those that follow the Old Testament. And it stands for responsible financing, socially responsible financing for somebody who does not subscribe to a particular religious belief. And we challenge that if you apply these principles in the model that we share, not only would the customer benefit, but their neighbors would benefit and society at whole can benefit as well because of the economic principles and the benefits of this model. So it's something we're very excited to share with all of America because we feel it really is a viable alternative to what's out there. Briefly, Lariba and Bank of Whittier, we're the only Islamic banking and financing group in America that is owned by the American Muslims. We were formed in 1987 by a group of Muslims, not from overseas, not from anywhere, people that pooled their savings together, literally to make one home loan, one home financing to each other, one after the other, or a car, one after the other. So this is the humble beginning that we started with in 1987. And we're working to build a future, a riba-free future, not only for ourselves, our grandchildren, but their grandchildren and America at large. So our focus is not on making money today. Our focus, which has been since 1987, on developing an institution, developing an alternative to that would last long after we're gone. And we hope that you would join us in that effort and appreciate this. And it's something for America at large. It is not for Muslims. When we share that with the regulators, they're really amazed that something like that exists. They say, we've heard about that in the past. We didn't know there are institutions that do that. So as far as the Bank of Whittier itself, if I may start with that, we offer the same services that any traditional bank offers on a riba-free basis. So On the depository side, we have checking accounts, we have profit-earning savings accounts, money market accounts, certificates of deposit, all earning riba-free income and FDIC insured. So you have an option to using the traditional banks and benefiting instead of having to cleanse any interest earnings that you may encounter. Also, on the financing side now, a bank makes its money from deposits, gets deposits and uses the deposits in the form of financings or loans to make the money. So on the financing side, we offer new car financing, we offer home financing, both purchase and refinance. We also offer jumbo loans for those that want a larger loan than the so-called conforming limit, which is, I think, 766,000 now. We can go up to 5 million or even more, depending on the type of residence. We also offer home equity loans and cash-out loans, which only banks are able to do. So we can also meet your needs on that. Aside from the residential homes, we also do commercial property financing and all types of commercial property, starting with apartments, anything more than 4 units, to warehouses, office buildings, doctors' clinics, shopping centers, etc., and nonprofits. We're very proud of our nonprofit financing activity. We do Islamic financings, Islamic masajid, as well as Islamic schools. So you'll find a full service approach, and we cover all 50 states. The model and the approach we have taken, we like to look at it as anchored in research. What that means is it is something that has economic basis and economic principles that has been studies with research done on it to show the benefit of it. And that's how I can say, I can show somebody how using these principles not only benefits them, but benefits their neighbors and others. The model of financing we use, we believe applies the real spirit and additive value of riba-free financing because it uses an investment approach and it uses a marking to the market approach. And I'll get into these two concepts in a couple of slides, but it's the investment approach and the marking to the market approach. The model that we've used, alhamdulillah, has withstood the test of the 2008, the housing bubble, where homes, maybe Texas was spared. In California, we've had areas that fell 50% and 60% in value. Alhamdulillah, even with those severe declines, our model proved to save people. And the models that we've used, we actually pioneered the relationship with the Freddie Macs and the Fannie Maes, those government-sponsored institutions, using the riba-free approach. Prior to that, they were not using a riba-free approach. We were the first to do that in 1999. So in our unique model, the customer's name is the only name on title. We will hold a mortgage lien, if you will. We can, of course, compete on costs, and we service all our loans. We make sure that the servicing, which is the billings and the collection, that basically the process or the stage from the time the documents are signed until you pay off, 10 years, 20, 30 years later, that's called the servicing. We make sure we service our own, and the reason we do that is that so we can apply the riba-free principles in that relationship, apply the concept of tarahum, compassion. Customers that are having a financial hardship, we find ways to help them. It's not based on penalties and foreclosure and all that, as you may find in a traditional bank. And we train our associates, our staff, to really be riba-free advisors instead of salespeople. Our goal is to advise you whether purchasing this property that you want to buy makes economic sense or not by applying the principles of this model. that we'll go in a little bit. So this kind of gives you a quick overview. Of course, everybody wants to know, are you Sharia compliant? When you say it's riba free, yes, alhamdulillah, we're Sharia compliant. We're approved by all entities, including AMJA now. We're members of AOFI, the Accounting and Auditing Standards Board that deals with Islamic financing institutions. And we're the only group, Lariba and the Bank of Whittier, that undergoes annual Sharia audits. So in addition to the fatwa, everybody that offers Islamic financing offers a model that has a fatwa that says this is Sharia compliant. No doubt. The issue is we go a step beyond that and undergo an independent Sharia audit that looks at the fatwa, the validity of the fatwa, looks at the model application that we use, as well as the documentation that we use for the financing. So this, we're happy to undergo that on an annual basis. We feel it's our obligation, and we post it on our website, and it's posted in both Arabic and English. And of course, we serve all Americans, as I mentioned, and we consider that a window of da'wah into what we do. Bank of Whittier is highly liquid, 5-star rated by Bauer Financial, offers all the services of the major banks, as I mentioned. The core system we use is the same that Bank of America uses. We have 2 anchor branches in Los Angeles and in Richardson, Texas here, and we cover all 50 states through that. Basically, any service you find from a traditional bank you can get, including Zelle. And the neat thing about our ATM, we realize we only have 2 locations. We have an agreement with Bank of America and Citibank where our ATM card is used at any of their outlets free of charge, as if you're using it at Bank of Whittier. So that makes it easier for you. And of course, outside of Bank of America and Citi, you have the ability to use the ATM card at any outlet that has ATM, that allows for ATM, but can be subject to their charges, just to let you know. So let us get into a little bit about what riba is and how to avoid it. The simplest definition we came up with is riba is the renting of money for a benefit. The renting of money for a benefit. Whether you call that benefit interest, whether you call it profit, whether you call it commission, the label that you label that benefit with does not matter. The structure of the transaction is what matters, and are you renting money or not renting money? And the reason is, as it says here, money is fungible, meaning it changes form when you exchange it. If I take out a $5 bill and give it to Brother Nusrat, that $5 bill has certain serial number, it has characteristic, etc. And I say, I'll give you the $5. When he uses it, that $5 is gone, right? That serial number is gone. He can give me another $5, but it's not the same $5 that I gave him. So in order for him to use the $5, he has to consume it. He uses it and it changes form. So that's part of the economic analysis of what the money is. So money can only be invested. To avoid renting money, you can only invest it. And the beauty is, when you're investing, the return is not limited. As long as your return is correlated to the investment that you're putting your money in, it's halal. If the return is 2%, it's halal. If it's 20%, it's halal. If it's 200%, it's halal. As long as the profit that you're earning is related to that investment that you're making, and of course it's a halal investment to start with. So our slogan is, we do not rent money, we invest in you. So the model of financing we use is called DPU, declining participation in usufruct. The declining participation of usufruct is part of the musharaka band of models, and it's also called a sale with an exception, or bay'ul istithna. The way that it works is the model is based on the theory that a home or a table, basically any non-fungible asset, has two rights. There's the right to own it and the right to use it. You may not have thought of your home in that way. When you buy a home, you can decide, you own it. Once you bought it, you own it. But you can decide to use it or rent it out to somebody else. And if you rent it out to somebody else, then you give up the right of usage to your tenant, the person that's gonna occupy the property. So in our model, we identify those two separate and distinct rights. We say we purchase the property with the customer. We put our share, the customer puts his share. And on day one, we sell our ownership share back to the customer, but we hold on to our proportionate right of usage. That's why it's called a sale with exception. Exception of what? Exception of our proportionate share of the usage, the istithna, bay'ul istithna. And we'll go into that a little more. But very important, the way the profit is calculated, it is based on the actual rental value of the property instead of a predetermined interest rate or profit rate. So we do not start with the market rate and call it profit or call it commission or call it rent, what have you. We have to start by the rental value. How do we know the rental value? We actually research it ourselves. We can ask real estate agents, we can ask appraisers. We do our own Zillow and Google and Redfin research. And we ask the customer to do the same thing themselves. And we share our findings and agree on what is a fair rental value for this property or a range of rents for this property. And whatever rent we agree on is going to be fixed for the whole term of the contract. So let's say, for example, we agreed that this property rents for $1,000 a month. The 1,000 is fixed for the 30 years, but we get a share of that 1,000 every month, and it declines every month as the customer pays back the principal, the capital that we put in. So if we start out financing 80%, for example, that 80% share is going to go down to 75, 70, 60, 50, etc., all the way to zero once the payment is fully repaid. So as I mentioned, in our model, the customer holds the title, 100% of the ownership title on day one, by virtue of the fact that we sell them our ownership share on day one, so they have 100%, and we hold the share of the rent. We share the usage. By holding our right of usage, we're sharing the right of usage. So the customer starts, let's say, with 20% right of usage. I start with 80%, and that relationship flips over the time of the financing. The customer gains more and more of the usage right as he repays, and my share goes down. So our goal is to offer a fixed rate alternative, a fixed rate financing, and the financing that we offer is considered a debt that will show as a dain, a loan on your credit for the amount of the financing itself. So if you finance 100,000, you'll have 100,000 outstanding. There is no future profit. There's no additional amounts added to that. Your obligation to pay us is the 100,000 that we put in, plus our share of the rent for as long as you take to pay back. So if a person were to purchase a house today with us and pays back after 1 month, and we had contributed 100,000, all the customer would pay is 100,000, which is what we paid, the capital, plus our share of the rent for 1 month. That's it. So if the rent was 1,000 a month, he would pay 80% of that, or $800. That is all the profit that we would make if he paid off after 1 month. If he takes a year, then our share of the profit, a share of the rent for a year, 10 years, etc. And all ownership benefits, this is very important, all ownership benefits and obligations are with the customer from day one. So appreciation accrues to the customer. The customer decides if he wants to live in the property or not, if he wants to improve it or not, add on to it, if he wants to refinance, if he wants to sell, how much to sell for, if he wants to get a home equity loan, for example. All those are the rights of the ownership. He does not need to get our approval, and we don't use an LLC structure or anything like that, that you have to get their approval to do so. So here's a schematic about the difference in our approach from the banking, traditional banking. The conventional, under the conventional in yellow, you see this is the standard amortization table. You see loan on top that goes in, followed by the number of years, so the loan amount, the number of years, the interest rate that the regular bank is charging you, and what the amortization schedule gives you is the monthly payment that you have to pay every month, right? You've all seen that. It's quite common. In our financing, it's different. On the right-hand side, you'll see in the green, we put in the investment value. What is the investment value? The home. The total value of the home, whether it's the purchase price or the appraised value. So we put in the investment value. We put in how many years the customer would like to pay back or would like us to be involved in this investment. And we can go all the way up to 30 years. We put in the monthly rent of the property that we researched. We put in our share and the customer's share of that investment. And what we come up with is the rate of return on investment that comes out of that rent and the monthly payment that the customer would have to pay to fully extinguish this transaction over the period of time. So instead of putting in a rate to come up with a payment, we put in the investment value, we put in the monthly rent and the number of years to come up with the rate of return on investment that this investment is generating, that we're sharing in, and based on that, we calculate the monthly payment. Yes, please. Yes. Very, very good. I understand. Very good question. The investment approach says the house has a rental value or an investment value, an investment return value. When I and you purchase the property together, and I put, let's say, 80% of the purchase, I have the right to use 80% of that home, right? Because I've contributed 80% of that price. So the choices are either I'm going to move in and use 80% of the house, 3 of the bedrooms and 1.5 of the baths, or I say, brother, why don't you go ahead and use my share and you pay me the equivalent proportion of the rent, 80% of the rent. So even though you're my partner, you were the one that put the 20% and you're living in the house, you still have not paid for my share, and as a result, you pay me part of the rent. So my benefit, my profit, is that share of the rent that you pay me for my share. Correct, because you have all the ownership benefits and rights. The tax advantages, the mortgage deduction, the appreciation, all those are ownership rights, and you're entitled to those. Yes. Two. There's the payment, and there's actually a slide on that. The monthly payment has two components. The first component is the repayment of my capital, the principal, and the second is my share of the rent based on my share that month. It's actually one payment, but part of it is the principal and part of it is that. Right, not two payments. Good question. Yes, brother. Yes. Yes. Right. Correct. Correct. Sure. Correct. The rent, my share of the rent is you have to pay every month. Correct. That only covers my share. The rent, yeah. I charge you my share of the rent. So as I said, let's say the house value, rental value, is 1,000 a month, and I contributed 80% of the purchase price. I'm entitled to 80% of the rental value. So I get $800 of that 1,000 as my rent. That's my profit. It has nothing to do with the repayment of the capital I put in. That's just my profit. In addition to that, you will pay the 1,000 in your example of principal in order to pay back the amount that was the capital that I put into the investment. Actual rental value of the house. We will research it. We will check in your neighborhood based on your address what other properties are available for rent, and then we calculate based on a per square foot basis how much is that rent, and we develop a range. So for this house here in Frisco, the range of rents is, let's say, between $1 and $1.25 a square foot. Now, where does your house fit in that range? Is it more similar to the low end of the range? Is it more similar to the high end? Or is it an average? We discuss, we negotiate. And you tell me, no, based on the feedback, I think it's here. Whatever that value is, that will be fixed for the term of the contract. Exactly, it can vary. Absolutely, it varies based on the property. Exactly, exactly. No two properties are alike. You're welcome. Exactly. Exactly. With the one clarification that all the agreement is going to be written up front, and we'll give you a schedule that solves for a fixed monthly payment, one level monthly payment that the customer pays over the 10 years. And within the schedule, it'll say how much goes to the rent and how much goes to the profit. Yes? The rental portion, not the principal portion. The rental portion is considered implied interest or mortgage interest for tax deduction. So that's the portion that he's entitled to use. Yes. Yes. We do not, I understand, we do not have the right to adjust it. Once we enter into the agreement says it's for 10 years. We don't have the right to adjust it. But you, as the customer, have the right to pay off at any time. So what happens in that example, the customer says, I can refinance. If I refinance now, I can probably have a lower payment. So, Lariba, I want to pay you off. and you get the money from refinancing. And we do refinancing as well. Yes? Mabruk. Yes. No, no. It's entirely yours. It's exactly because I've sold you my share on day one for that $80,000 we agreed upon. That is all that you owe. If a year later your balance is 75,000, that's all you have to pay. If you sold it for 500,000, mabruk. No prepayment penalties. Actually, and did I skip a slide? One of the things that we do, and actually it applies to the Miskeen Fund, is by saying we service our loans, it gives us the ability to apply the riba-free principles in the relationship with the customer. One of those principles is funding a Miskeen Fund. A Miskeen Fund is a fund where we, if we earn any inadvertent interest that we need to cleanse, or if we have to charge somebody a late fee, we avoid charging late fees. But if customers habitually late, and not for a financial hardship, they just don't like to keep their promises, we will take the late fees and we would put it in the Miskeen Fund, which goes to charity in its entirety. So we have no incentive to benefit from one penny of late fees or penalties or anything like that. So not only is there no prepayment penalty, we loathe in charging any late fee, but if we have to, we take it and we put it in the Miskeen Fund to help people that are financially distressed. Unfortunately, we don't do land. It has to be a developed property when we're talking about real estate. So it could be a residential property, could be an apartment building, it could be commercial, but no land and no construction at this time. The rental value. Number one, the risk and the rental value. We cannot apply this model on land. The rental value of land is not known. And then the risk, it's highly speculative, and the regulators don't like financial institutions to be invested in these types of entities. So we have, I mentioned, we undergo an annual Sharia audit. Raqaba is the firm that does the Sharia audit. The Dr. Abdelaaty Mash'al is the principal of Raqaba. He was the Sharia scholar for Kuwait Finance House and Al-Rajhi in Saudi Arabia. We have a distinguished guest from Medina, and he actually studied in Medina. He has 25 years of audit experience, and we're happy to report that his findings are on our website, and he confirms the Sharia compliance of our model. We mentioned the research. We mentioned we like research. So here are some of the books that our founder, Dr. Yahya Abdul Rahman, has authored in 1994, his first book on Lariba Bank. In 2010, he did The Art of Islamic Banking and Finance. In 2014, the picture is dropped. He did the second edition of The Art of RF Banking and Finance, which was translated in 2016 to Turkish. And in addition to the books, Arabic is underway, by the way. And in addition to that, there's 2 research papers that were done by ISRA, the Malaysian research arm of the central bank, on our model, and they're also available in Arabic and English that would be available upon your request. Some of our advertisements. These are some of the projects we were fortunate to be involved with. You're familiar with the Irving Masjid. We helped finance. Of course, Frisco. This is the rendering. Mesquite. Tacoma. We finance in all 50 states, by the way. Houston, Memphis, Tennessee. These are Islamic schools. Islamic school in Boston. We do fresh foods franchises like KFC, Einstein bagels, Baskin Robbins, doctor clinics, things of that sort. And the thing that we always say is we answer to a higher authority. So we're not worried about what profit we make. We're worried about what action we make to make sure it's Sharia compliant. And we invite everybody to live riba free. Yes, brother, I'm happy to answer. Alaikum salam. Like an amortization table. Understand. Jazakallah khair. Yes, yes. Jazakallah khair. Sure, sure. That's a good idea. Sure, sure. Oh, actually, on that point, I understand what you're saying. That's a wonderful point. Remember in my mission, I said we provide an alternative to the riba-free financing at the same or lower price. So the idea is not, it won't be less expensive than the traditional. One of the misconceptions that people has is, oh, because of riba, you take a mortgage from the bank, and the house is 100,000, and by the time you're done paying, it's 200,000. Well, I'm afraid that's not the riba part of it that makes it go from 100 to 200. That's the fact that you're taking 30 years to pay for it. If you were to add up the rental values, if you didn't buy and you added up your rent for 30 years plus the 100,000, it would be more expensive than the mortgage financing. So our goal of the product is not designed to be much less expensive. The way to make it less expensive in any model is to pay off quickly, pay off early. And the monthly payment we calculate is actually the minimum. We encourage you to make additional payments. It's a wonderful, I'll add a table that shows an example of a few payments. Of course, of course. Since COVID, yes. Probably 2 and 3%. I see. Alhamdulillah. Jazakallah khair. We'll be honored. We'll be honored. Right. I understand. Yeah. I understand. I appreciate it. Again, I remind of our mission, which is to provide the alternative at the same or lower price. And so as the market rates go up, inadvertently, we're also going to be impacted because we have to pay our depositors a profit. We have to pay our shareholders a profit. So if we pay them 2% and everybody's paying them 5 outside, they're going to say, thank you, it's been a pleasure. We appreciate what you're doing, but we want to do something else. Exactly, exactly. Yes, brother. Yes, yes. It's usually more expensive. I understand. I understand that. Well, and we do to the best of our ability. It's something we endeavor to, and we actually ask the customer to get a loan estimate from somebody else, and let us see what they're offering. And if we can match it or beat it, we're happy to do it. If we can't, we'll tell you we cannot. But compared to any other Islamic financing company, I feel very strongly that we can beat their offers, except for investment properties. Investment properties sometimes have a different profit structure between Islamic banks. So in some cases, we're not able to meet them at that price. But we endeavor to do that. And we ask the people to check and let us know what's available. But sometimes we may not be able to. Right, 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 right. The car financing is sort of unique because the manufacturer subsidizes that. They want to sell cars. They're not looking to make money on the financing. They're looking to make their money on the cars. So that we rarely are able to match. Yes, brother. Right, right. All models are riba free. That let me start from that. The, that's a very good question. If you allow me to just address the last part first, because that's easier. Um, I, the way to convince them is this: if you can get Islamic financing at the same cost or close to the same cost, and you're doing riba free, you're supporting the community, and you're enjoying other benefits besides cost, would you not try it? That's how I would attempt to convince people. And not everybody's convincible, but at least that's the way. But you have a wonderful question about, well, what's the difference between what you offer and some of the other institutions? Um, and I repeat, every institution that purports to offer Islamic financing has a fatwa that says their model is Sharia approved. Um, there's different models that are allowed within the Sharia. There is murab, which is cost plus. They basically buy a home and mark it up and sell it to you. There's ijara, where they buy the home and rent you a share of it. There's musharaka, where they share in the ownership. And then there's our model of the musharaka, which is musharaka in the usage only and not the ownership. So there are different models. Uh, there are advantages to the customer from each model. Some customer flavors of ice cream. Somebody says, I like vanilla. No, I like chocolate. Oh, I like strawberry. Oh, I don't like any ice cream. I like gelato. So you have different appetite. So we say, as Lariba, and I cannot speak for everybody, we offer compelling benefits to the customer in the fact that we're the only one that uses the investment approach and advice. Others do what, in my view, a shortcut. They say, we want to get you to match the market price. At the end of the day, we all want to make sure you're not paying more than the market. We've all been stung by the COBM. Have you heard of COBM? Cost of being Muslim? So everybody thinks of, I go to the halal store to get a chicken and I pay $2.95 a pound when I can get it on sale at Kroger's for $1.50. So we're all endeavoring not to give that impression anymore. It used to be in the beginning, but as Freddie Mac and Fannie Mae began working with all of us, we're able to be much more competitive. So as far as our model, the investment approach, checking the rental value, advising you, is it really a good value for you to invest $500,000 in this house based on the rental cash flow that it can generate? Or if it's not a good advice, you should be renting this house. So that's one thing. By knowing the rental value also, it gives you another dimension of should you be buying this house yourself. If I tell you, today's profit rate, quote unquote, is 6.5%. You say, okay, you check Bank of America, they tell you, yeah, 6.5%. You check another company, they say 6.5%. You say, yeah, 6.5% is good. Or if I tell you, no, I'm going to give you 6.4%. You say, oh, this is better. This is a better deal. But if I flipped it and I told you, the rental value that equals 6.5%, what if I told you that was the equivalent of $6,000 a month? It's still the same dollar amount you're paying, the same rate of return. But if I told you to reach that 6.4%, we actually have to assess the property value at $6,000. Now you have a different perspective. Now you can look at it and you say, I don't think this house is worth $6,000 a month if I were to rent it out. So again, even though the range of rents can stretch to $6,000, you would know that I would not be able to do that. So that's another benefit of using the rental value to calculate the rate of return and the monthly payment. But using this model does not cost you more. We'll always, if it gives you more than the traditional bank, we're happy to reduce the rent to make sure it's competitive. And the two last things is the servicing of the loans. Applying the riba-free principles during the servicing. Other companies that you mentioned by name do not service their own loans. Frankly, they don't like the headache of the servicing. Servicing can be a headache. The payments coming in, the check bounces, the payment bounce. You call, you find out what happened, why. Oh, I'm out of job, help me. It's not easy, but it's an important part of the riba-free financing principle. It's the principle of helping the customer in that relationship that we're doing. So that's another benefit that unless you're servicing, they have other entities that do it. I think Guidance uses US Bank and UIF has another one, Devon has another one. So they prefer to carve that service out. And then the Sharia audit. We're the only entity that undergoes the Sharia audit and publishes the audit on the website for all to see. So if we can offer you that package of benefits, if you will, at the same or lower price, why? Yes, brother. Yes. the bank's model of business is they get deposits from people and use the deposits to make loans. So we use the deposits to make the car loans, the business loans, the commercial property loans. When it comes to first mortgages, we use Freddie Mac and Fannie Mae as investors in those mortgages, as all the other companies do. The unique thing about Freddie Mac and Fannie Mae, if you're not familiar with them, they're government-owned now institutions. They call them GSC, government-sponsored enterprises. They do not make loans. What they do is they provide liquidity. They invest with any entity that provides that. So our relationship with them and our business model with them is based on our model. They review each transaction. They review the rent, the rate of return, the profile of the customer, and they decide if they wish to invest or not. Once they invest, they give us the money and we become an investment manager for them. So we do all the collections and applying all the principles that I talked about. We give them the payment that you made, and we get a fee as the investment manager. No. Based on the rental value of your property. Remember, we do not borrow from them. We do not have. Yes. Right. In some cases, correct. Yes. Yes. I understand. I understand. Your point is, yes. Absolutely understand. The relationship and the contract we have with Freddie Mac is that they invest in your particular home based on the particular rent that you're paying. So if we agree, you and I, that the rent's going to be $1,000 a month for the next 30 years, I show them that contract, and they can choose and say, yes, I'm happy to accept that, or no, I cannot accept it. This is too low of a rent. And once they accept and they invest, they will get yours. If market rates doubles next year, they're still getting what we agreed to. We're not subject to paying them market rates. So their investment is contract by contract based on the specific nature of that financing in the home we're doing. Absolutely. We'd love to have more depositors. The more depositors we have, the more we can finance and the more shareholders we have. Now, Bank of Whittier and Lariba are privately held and not publicly traded companies, so there are certain guidelines and qualifications a person has to possess before they're able to be a shareholder. But anybody can be a depositor. You have to be what the IRS and the SEC calls qualified accredited investor to acquire shares. So those actually we cannot talk about or advertise in a session like that because there has to be qualification for potential investors. We can share it with you. If anybody's interested, we have like a screening questions that we have to ask you, are you a qualified investor or not? And once we establish you are, we can share with you the details of how that works. And just as a quick reference, qualified investor is a person that makes $200,000 annual revenue individually for the last, I believe, 2 years, or 300,000 jointly household for the last 2 years, or they have a minimum net worth of $1 million, excluding the residence, principal residence. That is the general guideline for what a qualified investor is. Any other questions? Yes, please. Not yet, not yet, but we're in discussions with an East Coast bank in Minnesota, actually, that they say they specialize in equipment financing. So we're hoping to strike an agreement with them to use our model to be able to do equipment financing. But it is not available yet. I understand. I understand. They specialize in larger equipment like trucks, medical equipment, things like that, not necessarily the small type of equipment. Yeah, please. This is my cell number. If you can see it, you want to text me, give me your email, and I'll be happy to send you a copy of the presentation. وإياكم. If there are no questions, thank you so much. Jazakumullah khair. You're welcome. My pleasure. Could you send me your information?
I'll send you, inshallah. Absolutely, because I bought house with wife, so yes, I refinanced it.
Don't worry about it. You cannot. It doesn't make sense to refine.
Yeah, I know, I don't want, yes, inshallah.
Not your next time.
Inshallah, absolutely, because I want to understand more about Lariba, because I have second.
Thank you so much.